Hello everyone, welcome back to this senior series where I'm talking to people who are 55 plus who are looking into cryptocurrency. Now, I should probably start this video out with an apology. This video was supposed to come out on July 4th weekend. For those in the US, you know we just celebrated our Independence Day. Unfortunately, I didn't get this video recorded and edited in time, but it was still so important I thought we had to make it happen. So, Independence Day in the United States, basically celebrating our forefathers, declaring independence from England for a pittance of an additional tax. Guess what? Today, we pay an exorbitantly more amount of tax on everything. Property tax, sales tax, income tax, and tax, and tax, and tax. For many of us, even who are older, we think that this is just kind of the way the system is. This is the way it was developed. This is what the world does. And unfortunately, it is going to require you and I to start thinking from a completely different paradigm.
You must unlearn what you have learned.
What is that paradigm? The paradigm is that the current traditional banking system is a literal Ponzi scheme. Yeah, you heard it. It's a frickin' Ponzi scheme. Now, to help me illustrate that, I am going to go and place a couple of clips from episode 4 of The Hidden Secrets of Money. Link to the entire playlist of The Hidden Secrets of Money is in the description. Make sure that you go ahead and check that out, because let me tell you something. Nobody, well, let's be more precise. Very few people on this planet completely understand how our current monetary system works. And that's on purpose. That's why, as you went through high school, college, even if you took economics courses in college, you still didn't get the full truth of the matter of how our economic system works. Let's take a quick look at a couple of clips from episode 4.
Most people can feel deep down that something isn't quite right with the world economy, but few know what it is. Gone are the days where a family can survive on just one paycheck. Every day it seems things are more and more out of control, yet only 1 in a million understand why. You are about to discover the system that is ultimately responsible for most of the inequality in our world today. The powers that be do not want you to know about this, as this system is what has kept them at the top of the financial food chain for the last 100 years. They say that money doesn't grow on trees, but the truth is that the modern banking system creates currency far faster than trees can grow. Most people don't have a clue how currency is created. Economists and bankers make it sound so complex that people think they can't understand it. But I'm going to strip our monetary system down to its essence so that you can see the scam behind the curtain and just how it affects you. Every modern society creates currency in pretty much the same way. But since the US dollar is the majority of the world's currency, I'm going to use the United States as our example. This is called deficit spending. To pay for that deficit spending, the Treasury borrows currency by issuing a bond. So what's a bond? If you think about it, a bond is really nothing but a glorified IOU. It's a pretty piece of paper with numbers printed on it that says, loan me $1 trillion today, and I promise over a 10-year period I'm going to pay you back that $1 trillion plus interest. But what you need to understand is that Treasury bonds are our national debt. These glorified IOUs are to be paid back by you and I and our descendants through future taxation. Therefore, when the government issues a bond, It steals prosperity out of the future so that it can spend it today. To pay for the bonds, the Federal Reserve opens up its big old checkbook and writes bad, bogus, counterfeit checks that should bounce because they're drawn on an account that always has a zero balance. There isn't one penny in there. To quote from the Boston Federal Reserve, "When you or I write a check, there must be sufficient funds in our account to cover that check. But when the Federal Reserve writes a check, there is no bank deposit on which that check is drawn. When the Federal Reserve writes a check, it is creating money." The Fed then hands those checks to the banks, and at this point, currency springs into existence. The banks then take that currency and buy more bonds at the next Treasury auction. But what is a check? A check is also an IOU. When you write a check, you're making a note that says, "Here's my IOU for cash. All you have to do is go to the bank and pick it up." Now, it's very, very important that you understand this process because we're going to come back later and show you the devastating effect this has on you. The Treasury issues IOUs, bonds. The banks then buy those IOUs with currency. The Federal Reserve then writes IOUs, checks, and hands them to the banks in exchange for the Treasury's IOUs, the bonds. And currency is created. So what's really happening is the Federal Reserve and the Treasury are just swapping IOUs, using the banks as middlemen, and abracadabra, presto, currency magically springs into existence. This process repeats and repeats over and over again, enriching the banks and indebting the public by raising the national debt. But now, this base currency that's piling up back here is really nothing but a receipt or a claim check on an IOU, that bond. So it's really nothing but a supply of numbers. The Treasury then deposits the newly created currency into the various branches of the government, and the politicians say, "Hey, thanks for that." And the government does some deficit spending on public works, social programs, and war. The government employees, contractors, and soldiers then deposit their pay in the banks. Now, this may come as a shock to you, but when you deposit your currency with the bank, you're not actually depositing it into an account to be safely held in trust for you. Instead, you're actually loaning the bank your currency, and within certain legal limits, they can do with it pretty much anything they please. This includes gambling in the stock market and loaning it out, at a profit, of course. Now this is where the machine of currency creation really gets cranking, because this is where something called fractional reserve lending comes into play. Fractional reserve lending is exactly what it says. The banks are allowed to reserve only a fraction of your deposit and loan the rest out. Although reserve ratios may vary, I'm going to use a 10% reserve ratio as our example. If you deposit $100 in your account, the bank can legally take $90 of it and loan it out without telling you. The bank must hold $10 of your deposit in reserve just in case you want some of it. These reserves are called vault cash. But why does your bank account still say you have $100 if the bank has stolen $90 of it? Because the bank left IOUs it created, called bank credit, in its place. Now, I know this sounds crazy, but here it is in black and white from the Fed. Commercial banks create checkbook money when they grant a loan simply by adding new deposit dollars in accounts on their books in exchange for a borrower's IOU. So now there is $190 in existence. Now, the reason people take out loans from the banks is to buy something. They're going to buy a house or a car or something like that. So the borrower takes the $90 that the bank loaned to him from your account and he pays the seller of the item. But then the seller deposits that currency into his account, and his bank loans out 90% of that and leaves bank credit numbers in its place. So now there's $271 in existence. This process repeats and repeats until under a 10% reserve ratio, an initial deposit of just $100 can create up to $1,000 of bank credit, all backed by $100 of vault cash, just 10%. But as I said, reserve ratios vary wildly. On some deposits, it's 10%, on others, it's 3%, and on some forms of deposits, reserve requirements are 0. The result is that the expansion of the currency supply by the banks is far greater than even this example would lead you to believe. Now, massive amounts of currency spewing into society may at first sound like a fun idea. That is, until you remember one of the most important hidden secrets of money from episode 1. that the prices of everyday goods and services act as a sponge on an expanding currency supply. The more currency we have, the more prices rise. This is where inflation comes from. The true definition of inflation is an expansion of the currency supply. Rising prices are merely the symptom. So our entire currency supply is nothing but a couple of bucks whipped up in this hocus-pocus scam where the Treasury and the Federal Reserve swap glorified IOUs, and a bunch of numbers that the banks just type into their computers. That's it. That's our entire currency supply. It's nothing but a supply of numbers. If you thought that was crazy, get ready to enter the twilight zone of modern economics. We work for some of that currency supply. True wealth is your time, but we trade away moments of our lives, hour by hour, day by day, and year by year, for numbers that somebody printed on pieces of paper or just typed into a computer. Now those numbers represent our blood, sweat, tears, labor, ideas, and talent. We are what gives the currency its value. But here comes the really cruel joke. We work hard so that we can save some of that currency, so that we can pay the tax collector in the United States, it's known as the IRS. They then turn it over to the Treasury so that the Treasury can pay the principal plus interest on that bond that the Federal Reserve bought with a check drawn on an account that has nothing in it. Now let's do a recap on this section because this is where the system begins to rob you and I on a massive scale. Much of our taxes are not used for schools, roads, and public services, but to pay interest on bonds that the Federal Reserve bought with a check drawn on an account that has nothing in it. The Federal Reserve is committing fraud. But here's one of the biggest secrets of them all. Before the establishment of the Federal Reserve, there was no need for personal income tax. The Federal Reserve was created in 1913, and that very same year, the Constitution was amended to allow income tax. Do you really think this was just a coincidence? Ask yourself how much income tax you've paid over your lifetime. That means that there is interest due on every dollar in existence. Let me ask you something. If you borrow the very first dollar into existence, and that's the only dollar that exists on the planet, but you promise to pay it back plus another dollar's worth of interest, where do you get the second dollar to pay the interest? The answer is that you have to borrow that one into existence and promise to pay it back with interest as well. So now there are $2 in existence, but you owe $4, and so on and so on. The result is there's never enough currency to pay the debt. There is always more debt in the system than there is currency in existence to pay the debt. Therefore, the whole system is impossible. It is finite. It will come to an end one day. Whether you're making a payment on a loan or paying tax to make a payment on a bond, the portion of the payment that goes to pay off the principal extinguishes that portion of the debt. But the debt also extinguishes the currency. Currency and debt are like matter and antimatter. When they meet, they annihilate each other. If we just pay off the principal only on all the loans and bonds that exist, the entire currency supply just vanishes. So if we don't go deeper into debt every year, look what happens. The whole thing goes into a deflationary collapse under the weight of those payments. Politicians and pundits alike talk about balancing the budget, paying down the debt, and living within our means. They don't understand that that is deflationary. It is impossible to do under our current monetary system without collapsing the whole economy. This is why any talk of a debt ceiling is not only ridiculous, it's delusional. The system is designed to require ever-increasing levels of debt just to continue, and that's why politicians will always kick the can down the road and raise this so-called debt ceiling over and over again until the whole system finally collapses under its own weight. In other words, they don't want it to collapse on their watch. The Founding Fathers of the United States knew the dangers of central banking and fought to free themselves from this very thing. The Revolutionary War started out as a tax revolt, but now we must pay tax just to have a monetary system. Having just suffered through the hyperinflation of the continental dollar, which was printed into oblivion to finance the Revolutionary War, they understood the dangers of fiat currency and debt-based monetary systems. So to protect future generations from institutional theft and out-of-control government, They wrote into the Constitution that only gold and silver can be money for the simple fact that you can't print them. Our current system is not only unconstitutional, but it robs us of the liberty and prosperity our forefathers fought and died for.
Hopefully that gives you enough to go, what? And make you interested enough to go and do your own research with regard to our current monetary system. So it is with that thought in mind that our current monetary system is broken. And more than being broken, it is literally robbing us of our economic energy. Because the only thing that we have that we can't make more of is our time. We have a finite amount of time on this planet. A finite amount of time to convert our working energy into something that will hold its value into retirement and potentially to give to our children and our grandchildren. And I believe that that is something that each and every senior who's watching this video right now wants to do. That's why you're hoping that cryptocurrency might be that answer. That's why you're doing your research to see what cryptocurrency you should invest into. That's why you need to know what sound money actually is. I'm going to also put a link to an interview I did with Daniel Diaz, the Executive Director of Citizens for Sound Money, where we talk about that very question. What is sound money? Make sure after this video you go ahead and check that out. This video is gotten much longer than I originally intended. So I'm going to wrap it up by saying this. It's time for you to declare your financial independence. Do your research to what sound money is. Do your research if cryptocurrency is right for you, your children, and your grandchildren, and their children. And consider diversifying into something that has been sound money, like gold and silver. Again, links to everything about that in the description below. I hope you had a great 4th of July weekend if you live in the United States. And even if you don't, take this time to declare your financial independence.